Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open up the stage to get your stock queries answered by our experts. But before that, let's have a look at what the markets are up to. So Cheryl, the markets are seeing decent recovery from the day's lowest point, or rather from the opening tick. But talking about Monday, you are totally relating to the theme Monday Blues.
Absolutely. I think that's how I feel from within also. Monday Blues definitely kicking in. Even if you don't want it, you just feel the blues, isn't it? But talking about the markets, yes, they are shrugging off the blues. And actually in the positive territory, as you can see it on your screen, no doubts, we are flat with a positive bias when it comes to the benchmark indices. Let's take a look at exactly what Nifty Bank is doing, whether that one is holding out. No, Nifty Bank right now actually also inching towards the day's highest point, but still flat with a negative bias. Talking about the broader markets, is the mid-cap index and the small-cap index that is holding on strong compared to the benchmarks as well as Nifty Bank. So all in all, outperforming the benchmark indices in trade today. Talking about the list of gainers and the losers then, Coal India, HCL Tech, Hero MotoCorp as well as ONGC are among the top gainers on the Nifty, while on the flip side, if you look at the losing end, it is actually the consumer pack that's taking a bit easy. So you have Nestle that's down about 2.3%, you have DV's Laboratories down 1.3%, Asian Paints, Grasim, TCS are the other set of losers in trade today. Talking about the losing end as well as if you look at the private sector banks, they're also taking a bit easy in trade today. HDFC Bank, IndusInd Bank are among some of the top losers on the Nifty as well in today's trading session. But talking about the sectoral indices then, is the Realty Index that is taking it easy. It's down about 0.4% is the top sectoral loser in trade, followed by FMCG, while on the flip side is Metal that's holding on to good gains, and PSU Bank once again outperforming its private bank peer. So you have PSU Bank Index that's trading with gains about 0.8%. So that's the way how the markets are looking like at this point in time, doing absolutely nothing, Shrishti, but yes, nothing is always good.
Nothing is always good, definitely. But talking about the trading hours, then this particular topic has been in the chatter. We are talking about the extended trading hours, where NSE phased a plan suggests to a gradual approach to extended the trading hours. And in the initial phase, it did propose to extend the trading hours for index FNO from 6 p.m. to 9 p.m. And now we are getting an exclusive on this one for you, where an extended trading hours for equity derivatives is unlikely anytime soon. Let's get in more details what our sources are telling us. Ankur Mishra is joining us to give us all those details. Take it away, Ankur.
Yes, sources say that market regulator SEBI is going to have consultation with market participants before giving go-ahead to trade time extension. The regulator is going to check what is the preparation on risk, what is the preparation as far as settlement is concerned, and also the preparation on manpower, among other checks and balances which regulator is going to apply before considering the trade time extension. Remember, NSE, after claim to have discussion with the stakeholders, has sent a proposal to SEBI for an extended session from 6 p.m. to 9 p.m. in the evening, and that was proposed in the FNO segment in the indices only, so that the traders get a time and opportunity to trade and react to the global events if they want to. So this proposal was sent to SEBI, and after that there has been several questions which has been asked by SEBI to the exchange, and that process is continuing. But before giving a final go ahead for trade time extension, SEBI is carefully examining the proposal. It is going to have consultation with all the market participants before moving ahead with the proposal.
All right, thank you so much for that, Ankur, for actually getting us all that big exclusive. But let's hear out exactly what Nikunj Dalmia, who's the managing editor of ET Now Swadesh, had to actually say on this big news break.
See, with the index moves because of the underlying stocks which move. So if Reliance goes up by 5%, if Infosys goes down by 3%, it's the impact of these stocks in the cash market which leads to a derived value of the Nifty. Now, if the underlying cash market is not going to trade, and if only the FNO market will trade, then how will the derived value be done? For example, TCS numbers, they come at 6 o'clock and index is trading. So technically, how would you come at the derived value? Infosys comes out with a profit warning, the ADR goes down by 6%. NSE and Nifty is trading. So how do you come out with a derived value? So that is something which I think which still needs to be understood.
Right. We also spoke to Shilpa Rout, who's the derivatives lead analyst at Prabhudas Lilladher, and who believes that the extended trading hours is inevitable and it's only a matter of time before the market regulator gives the go-ahead. Listen in to what her rationale is, what her take is on this particular front.
Sooner or later, I believe this move will come because we have to also get into the grasp of, 22 hours trading window that we see throughout the global market happening. So in this regard, this decision will come sooner or later. But of course, before that, this examination and this, the time that SEBI is taking to analyze all the developments that has to happen before this move comes in is very, very appreciable. It's not only about the manpower that, the brokers have to think about increasing, but also about, what kind of participants will be there in that extended hours. We have already seen, the report by SEBI that 9 out of 10 F&O traders, they are already making losses. So will it be 10 on 10, or this will actually give some sort of a platform for those traders to react to global markets and, take their positions lightly. Underlying happening in those hours, and how will the Nifty and Bank Nifty be calculated? That is also one thing. Of course, they must have also taken this into consideration. The things that we are discussing now, I'm sure NSE must have taken everything into account. But this entire thing has to happen sooner or later. Before that, this sort of preparation time that is being taken is something that we all need to have patience and see what is being decided by SEBI. So whatever the outcome is, we will have to just be ready with it.
All right, so that's the take coming in from Shilpa Rout. One thing is very clear, Shrishti, unlikely anytime soon, but whenever it happens, you and I are going to have a longest working hours, and I'm sure the viewers will be very happy to get guided by our experts, isn't it?
Well, yes, absolutely. Because Cheryl, in this time when we are getting so many queries, I'm not sure how they will be all F&O queries loaded up between 6 to 9. So I think we should get up for another show as well.
Absolutely. But till then, we will now take a break on this edition of Buy Now Sell Now. When we come back, we will start taking your queries, at least for the cash market. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related query. Remember, viewers, you can connect to us live on the WhatsApp number that'll be flashing on the screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in the stock, mention the buy price, the quantity, as well as time horizon. In that way, our experts will be able to help you better. And talking about our experts, today we have Kunal Bothra as well as Ashish Maheshwari joining us on the show. Very good morning to you, Ashish, as well as Kunal. Thank you so much for joining us on ET Now. And let me kickstart with the query with you, Kunal. This one has come from Anand from Bangalore. He wants your views on GVK Power. He's saying this particular counter was seeing a steady uptrend over the last 3 months, but right now, if you look at the stocks of the past few days, it's actually been seeing a drop in every session. He's already purchased about 2,000 shares at a price of 5.25 rupees per share. Does it make sense for him to hold on actually, or look to book profits and exit?
Time and again, shall we advise that not to look at such kind of a penny stock, because they may look very attractive when they are going up, but when they correct or go into sharp corrections, it's very difficult to exit them at your expected or anticipated prices. That's the biggest problem with these kind of names. The trends are not sustainable. The market gets into a correction. If there's any kind of a cutoff in terms of the mid cap names or the mid cap indices, we typically see these stocks, mid cap, small cap stocks, go into sharp corrections like what we've seen for JVK Power. So no exception for this stock as well. I would suggest that whenever you get that window of the stock not hitting a circuit and opening up, about this 8.5 or 9 levels, I think it's a good time to exit.
Okay, moving on to the next counter then. And Ashish, firstly, a very good morning to you. And the query that is coming to you is from B. Soumya. She wants to know, can she buy Central Bank at current market price? That's one query. And she also has GM Financials from a price of 79 rupees. What is the outlook on this particular counter? Should she continue to hold this one, and any target on the same?
The central bank is a stock I think we can continue to remain invested. As far as my personal view is concerned, I'm quite bullish on PSU banking stock, and central bank has continuously delivered also. Only thing is that right now some PSU banks are under some consolidation phase. But for long term horizon, surely you can remain in invested here because fundamentally it's strong.
Okay, this one is from Sitaram Ganesh, writing to us from Chennai. In Kunal, he's holding Motherson Sumi of worth about 30,000 shares, about 30,000 rupees, I believe, is what he's saying. He's seeing a loss of about 16% in the stock. So now he wants to know, should he look to book out losses from this one and invest the balance amount of Suzlon or J&K Bank for a period of 3 to 6 months to get back the lost amount? Do you think this strategy makes sense? Move out of Motherson Sumi given the fact that he's making a loss in this one and instead look to book or buy Suzlon or even for the matter of fact J&K Bank?
See, I would assume that if you're making 15% loss on Motherson Sumi and looking at the price of 95, which means your investment price should be around 110, 112 mark, and that should be ideally maybe a couple of years back for Motherson Sumi, or if not, then I think even prior to that. Now, I would probably look at it this way: the recent charts for the stock has been quite strong, and it's trying to make a recovery for itself. So from 60 levels, the stock came very close towards that 100 mark. Now it's consolidating in the band of 10 rupees around this 100 levels, which I believe is also a good sign for the stock price. I would ideally believe that you can stay put with Motherson Sumi itself and look out for further upward trend, because whenever the stock breaks out of that 100 barrier, maybe in the next couple of months or in the next 1 or 2 quarters, you could probably expect that the stock would get into a strong rally mode and maybe come back towards 120, 125 mark. But on the other hand, I think the likes of Suzlon, purely from a short-term play, could probably be a attractive trading play. I would not look at recommending Suzlon as a longer-term investment. So I think you'll have to bifurcate your time horizon, your risk appetite, as well as your position sizing accordingly.
Okay, Kunal, once again coming to you, this query is from Rajesh Maheshwari, and one such stock that you have been tracking is NMDC, and Rajesh is holding the stock at a price of 130 rupees. He's holding 600 shares. He wants to know how much steam is left in NMDC, sitting at a decent gains. How long should he continue holding this one?
Well, I'll say it's not yet reached its boiling point, so I think you can still continue to hold on to the stock, provided if you're a high risk you have a high risk appetite, as well as you have a time frame which is extended to at least 6 months to 9 months plus, because the stock has just very recently confirmed a breakout of a triangular pattern, and I'm talking of it from the monthly charts for the stock price, which means that possibly the stock may continue to move up higher. The only catch which I said is the high risk appetite, because the stock would probably be extremely volatile. It's prone to a lot of news flow, and we've seen how the metal commodity themes have behaved in terms of news flow. They are very susceptible to that kind of a news flow. So you may have that odd correction of 5-10% which may come across into that stock price. So if you can try and take advantage of that as well, could be a good strategy, but it all depends on your risk appetite as well as your time frame.
All right, this one is coming for you, Ashish, and this one is coming in from V. Ravi Chandran, writing to us from Chennai. I'm unsure if you track this counter, Orient Ceratec. Have you had a look at this particular stock by any chance? All right, what about Brookfield REITs?
That is also not under active tracking radar. I'm
Right,
sorry.
Oh, no problem. I'll skip both of these then. And instead, I will take this one from Joseph. He's writing to us from Mysore. 110 shares of Adani Post purchased at 856 rupees per share. Medium-term view on this particular counter. Where do you see this one headed? Do you think fundamentally makes sense to stay put with this one, Ashish?
At least fundamentally, Adani Port is a better bet. And in fact, we have seen continuous good quarterly numbers coming from them over a period of last 1 year also. In fact, if you remember, March to June quarter also, there was almost 1,000 rupees net profit went up for companies like Port. So a lot is happening in this company. The thing is, till the time there's Israel-Hamas related issues because they are having a port in Israel also, this will be slightly subdued. But longer run, stay invested.
Okay, stay invested. That's the advice coming in on Adani Ports. But Ashish, one more query your way. This one is from Sushil Kumar from Trichy. He is holding shares of HDFC Bank and bought at a price of 60 1,640 rupees. The results are due today, and what the management guided previously wasn't a great commentary after the merger of HDFC Bank and HDFC Limited. How do you see this particular counter for the next 6 to 12 months?
As far as performance-wise, I'm not having any doubt that after the merger also, like the margins will come down or something of that sort happen, because we have seen in their in quarterly updates also there was significant growth in the loan book. Only thing is banking stocks, we are witnessing a lot of FI liquidation at present. In fact, they are seller in HDFC Bank stock for quite some time, and on combined entity basis, they are hold almost 30 to 33% holding in HDFC Bank, and their selling is not coming down in this particular bank. So I'm not that bullish as far as HDFC Bank is concerned in short to medium run. In my view, till the time FIs are going to come back and start buying, this bank stock won't give you better return. So instead of this, I'll prefer that you look at more at Axis Bank or IndusInd Bank, which can give you better returns.
Right. But Kunal, staying with HDFC Bank, R. Ganesh already has this count at the price of 900 rupees per share. What should his strategy be? Stay put with HDFC Bank, or should he book out profits in this one?
Yeah, if you're holding on from 900 rupees, you're sitting into good profits, and it's a phenomenal large cap name. Yes, it has gone through its issues post the merger for itself, but then I believe that those could be short-term aberrations for the stock prices. And I think ideally you should try and take advantage of these short-term aberrations or negative news flow for the stock, because in the longer-term perspective, we expect that these stocks are the kind of names which does exceptionally well from a portfolio perspective. So I would continue to advise to hold on to HDFC Bank even post results. If in case there is any kind of a disappointment and the stock corrects, I think that could still be a good advantage to try and average out further.
Okay, Kunal, one more query coming specifically for you. This one is from Krish, and he wants your advice on two counters which are doing phenomenally well. One of them is Polycab, which is sitting at a lifetime high. And I remember after its Q1 earnings, the stock hasn't really looked back, and now sitting at over 5,400 rupees. The another one is Linde India, and Krish wants to know, can he add both of these counters at every dip? What's your advice?
Well, I would believe so. I think it's a good strategy to have both of these stocks as part of your mid-capish end of your portfolio. I think both these stocks have done reasonably well. In fact, in India, just last week or so, the stock had gone through a 10% correction from 6,700 to I think sub 6,000 levels where it was trading. So that is a good time to try and average out further. Follow the same strategy or set of strategy for Polycab as well. A 10% average correction from the recent swing highs, or a retracement towards the 50-day moving average, whichever is suited best for the stock price. That's a good time to try and accumulate or add further.
All right, this next query that I have is one more coming your way, Kunal. Harpreet from Masuri wants to know about SBI Card as well as Suzlon. He's holding both of these counters, Suzlon at 17, SBI Card at 900. What's your view on both of these counters? What should his strategy be? With SBI Card, he is actually in a loss.
So Suzlon, as I said, short-term wise, you can look out for trading this name. But again, your risk reward has to be quite apt over here. Your discipline has to be quite strong. Maybe 25 could be a stop loss for the trade. And the upside, you may look at 33, 35 as a target, and keep on revising the targets in case, as well as the stop loss in case the stock moves up higher. For SBI Cards, I think it's a very interesting chart. The stock, on the technical basis is reeling below its 200-day moving average, but also it's forming a base at the 200 levels. It's not as if the stock is significantly below its long-term averages. I believe that whenever the stock gets into a breakout, say about 820, 825 mark, that could also coincide with the breakout of 200 DMA for SBI Cards and possibly a major turnaround for the stock price. So hold on to the stock as of now. Wait out for the point when the stock breaks past about 820. That could be a good time to average out further.
Okay, that's the take on SBI Cards. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock related queries. And to answer the same today, we have Kunal Bothra as well as Ashish Maheshwari with us. And Kunal, another query coming your way. This one is from Raja, and he wants to know, is RBL Bank a good bet for a long term? Can he enter at current market price in this particular name?
Well, technically, if you ask me, I would definitely say that RBL is a very good bank to hold from a long-term play. I think from I think maybe a few months back, I remember when the stock was at 170, 75 levels, had mentioned a buy in RBL Bank, and even at current levels of 240 plus, I would still believe that the stock looks very attractive given the kind of setup the stock has shown in the last 6 odd months. I would still believe that it's a good buy from a long-term play as part of your long-term portfolio.
Okay, the next one is coming your way, Ashish. This one is coming from Indu, and she wants to know for the long term which particular counter she should add more in a portfolio. Is it JSW Energy or is it Tata Power?
In fact, if you ask me, you should do 50-50 both. Because as far as JSW Energy is concerned, slightly volatile stock, but Tata Power, again, we are finding value at 250 to 55. You can't go wrong in Tata Power as such. So my suggestion will be take both, and this particular sector will continue to do well.
Okay, Kunal, another query is from Mani from Chennai, and he wants to know, is Ramco Cement a good buy in futures now, and any likely target in the near term for this name?
See, it's a good stock to hold. If you are looking at it as a positional play, the stock has given a weekly chart breakout. I think the weekly breakout for Ramco Cement was just about 959 or 962 mark on the spot level. So, which means that the stock looks attractive from a weekly swing perspective. I'm not sure from a short-term trading play or from a futures play on a very short-term kind of a time frame, because after today's slight correction from the stock price, there seems to be that there's an some sort of supply which is coming out for the stock at 1010, 1015 levels. So ideally, wait out for a mild correction, maybe so closer to 980, 985 could be a good point where you need to buy, because the risk reward both on the short term as well as on the weekly would be in your favor.
All right. Moving on, this one is coming in from one of our viewer who's not mentioned his name. Yes, he's not mentioned his name, but Adani Power, he's holding this particular counter, 2% loss in that one. Adani Energy, he's saying 8% loss. What should he do? Should he continue to stay put with both of these counters despite facing minute losses in his holding, or should he look to shift to another company altogether? Kunal?
I'll suggest to shift some other company altogether, and I think there are so many options available at this point of time, given the kind of market positioning. Larger cap names, I think something like maybe HDFC Bank, ICICI Bank could be good bets at current levels. You may look out for another private sector banking name, something which you highlighted earlier, RBL Bank. That's also a interesting opportunity at current levels. From the mid cap end of the market, if you're looking at it, it's a slightly high beta pocket. From the financial services, L&T Finance is something which I am extremely bullish on, and I would believe that the stock could pretty soon get into a breakout mode. So there are a lot many other options, more quality names. I would suggest to shift to them.
Okay, moving on to the next one, and Ashish, another query is from Girish Iyer, and he wants your take on two counters. Firstly, is holding 10,000 shares of BHEL at a price of 138 rupees, and he has 5,000 shares of BOB from a price of 216 rupees. What he's saying that he entered both of these counters at a margin. I'm not sure whether he's talking about any future out here, but presently at a loss. So what's the outlook in both of these names?
Both are fundamentally strong scripts, and there's some consolidation happening in both, if you ask me. So, because of the kind of run up we have seen in BHEL stock, the stock is taking some breather because stock is in continuously under the ban also in future and options. So, I don't think so. You need to worry at all if you're holding BHEL and BOB. Remain invested here. My target for BHEL in next 6 months is 150, because the kind of order book they are having, surely they will do well in coming 2 quarters. As far as BOB is concerned, again, fundamentally strong bank. 200 is always a good level to enter into BOB. Target will be to around 230 in next 6 months.
Ashish, another one coming your way from Dilesh Joshi. He's writing to us from Mumbai. He's a long-term investor, but he wants to know whether he should look to buy Zomato right now for the long term. Do you think he's missed the bus to buy Zomato, or you think now also is a good time to buy Zomato because the longer-term uptrend will continue for this one? I like the way how Kunal was smiling when I asked this question. Kunal, so let me take your view first, then I'll go to Ashish.
No, I think I'll prefer Ashish answering this first.
Okay, then Ashish, what's your take on Zomato? Do you think it's still a good time to go ahead and feast on this one?
Yes, certainly it's a good time to buy Zomato stock also. And we have seen a decent run up in this stock, and this is only not on account of retail or traders buying. We have seen over a period of time BIA is also actively buying Zomato stock along with FI. So there's a reason from 80 rupees stock has come to 110. But I'm expecting the stock will further move to around 125, 130 levels maybe in next 3 months because undercurrent is very strong here, and now fundamentals are also improving.
So what's your take? I thought maybe you were bullish on Zomato stock. That's why the smile on your face. Or are you thinking about what to order next from Zomato's portal?
A mix of both. In fact, it's 2+1 there, not 1+1. But I believe for Zomato also, I would agree with Ashish over here that I think the stock looks fairly attractive. It's very recently that the stock has now gotten to back into the taste of many investors because after that sharp drubbing the stock had seen in 2022, it's a good comeback for these stocks, and it's a very mild kind of a comeback as compared to the correction which these stocks have shown in the last 1 year. So I believe that this correction or this rally should sustain and the stock can see some decent upside. So it's more of a buy and hold kind of a stock.
So Kunal, not 2+1 if you were talking about us, you actually have to go ahead with 3+1 because we just got an request from our producer Abhishek that you have to order stuff for us anyway. So
long time pending, isn't it? Breakfast, lunch, dinner and snacks also you'll have to order for us. Looks like it, Kunal.
Yeah. Let's count the list of pending parties from all of you as well, and then let's make a tab of that.
Okay, then on that note, we'll actually take another query. I think we should get going with the queries instead. This one is coming from Rajesh Pai. He's writing to us from Dubai. And he has 500 shares of Reddington at a price of 157. He has Sona BLW 500 shares at 560. He wants to know both technically and fundamentally on this particular counter. But let me take your take on this, Ashish. Reddington as well as Sona BLW, do you think makes sense to stay put with this one, at least if not for 2-3 years, at least for 1 year?
Reddington is a underperformer stock. If you see, this moves a very narrow range of 120, 30 rupees for the full year, and there's not too much happening. So Reddington is a sale in my view. And as far as Sona BLW is concerned, again, this is a stock which has rewarded well to investors in the last few months. And whatever the block deals, etc., were there, they are all over. So I think Sona Comstar, you can continue to remain invested and try to exit at 600 rupees left.
okay, moving on, and Kunal, the another query that's coming is on HDFC Life, one of the result candidates. After a decent opening, the stock did drift in the red, but now seem to be recovering. Shiva from Chennai is holding 1,000 shares from a price of 630 rupees. That's the current market price, and he's anticipating 6% upside in the short term and looking at the target of 670 rupees. Do you believe that's achievable in the short term?
Yeah, I'll second that. I think it's a good chart. The stock has been coming back towards the support 618, 620 approximately on closing basis as a support, has been acting as a support for HDFC Life. So maybe you can keep that as a closing base stop loss for your trade. But I think expecting or anticipating a 5-6% upside from current levels could actually turn out to be a good strategy. The only concern, of course, is the time frame because the stock sometimes gets into an extremely low beta range for itself. But I think price-wise as well as potential-wise, it's very much likely.
All right, this next one is coming in from Sunny, writing to us from Mumbai. This one is for you, Kunal. Windless Biotech, 100 shares at a price of 385. Wants to know whether he should continue to hold on to it or look to exit. He's saying that he has a time horizon of approximately 6 months when it comes to Windless Bio.
So low liquid name, I think in fact even on a day like today, if I'm not wrong, the stock has shown just some 18,000 or 19,000 quantity in terms of trading on the NSE. So ideally you should try and stay away from these names, specifically from a long-term play, because as I mentioned in the first query, that when stocks go up in such low liquidity, it may look attractive, but on the way down, it will be very difficult to try and exit these names. So ideally, I would suggest to exit the stock.
Okay, Ashish, the next query that's coming is from Rima Deepak, and he's holding 200 shares of Power Grid Infra Investment at a price of 118 rupees. Can you advise him whether to hold this particular name, add or exit at this point?
Power grid, if you ask me, like again, in power sector, I am quite bullish, and whether it's a
That's
PFC.
Ashish, that's not power grid. That's actually power grid infra investment.
Okay. I got confused because on screen they were showing chart of power grid. Uh, Power grid investment is, again, we must understand this is a very safe. This is for investors who are looking for very steady and safe kind of returns. Because typically the business model is whatever the power grid is going to invest in the grid setup, and whatever the rental will come from power companies, this will be distributed to ultimately end users. So, or investor like us. So, if you are having a long-term horizon and want a steady set of income, I think Power Grid Investment Trust is always a good buy or hold in my view.
Kunal, next query is coming for you from Sagar, and Sagar wants your view on ultra short-term and high ballistic stocks till Navratri, because he and his friends are intending to put a huge corpus amount in these counters and then use the proceeds at the end of Navratri for philanthropic needs. So he wants to know, is there any such stocks which is highly aggressive or hyper aggressive impulsive trades, whether it's intraday, BTST or FNO swing trade, doesn't matter. He wants to just maximize the alpha for the next few days. So any stocks or any sort of strategy that you have in mind where he can actually go ahead and deploy the corpus to get good returns in the short term, so that he can actually go ahead and fulfill the philanthropic needs?
Well, you can. There are a few stocks which on the short-term radar look attractive to me on the charts. L&T Finance is something which looks attractive. Now, I'm not sure on the FNO side we can do it, because if I'm not wrong, the stock is in FNO ban. But on the cash side, of course, it's a very liquid name. You can consider that. You can look out for Havells. I think that stock is due for a very big breakout, at least on the charts. That's something which you can look out for. Deepak Fertilizer is something which I'm extremely bullish on. I think the stock is up some 3-4% already, but I would believe that this could be a start of a big breakout. So few names which at the top of my mind click, so that you can probably consider buying these names at current levels as well.
Okay, but with this viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more.
All right, welcome back. You're watching Buy Now, Sell on ET Now. Let's continue taking your queries then. And this one is coming from Ramesh, writing to us from Delhi. He wants to know about Gland Pharma, and he wants a guidance on the buying price for this particular counter. Kunal, what's your take?
So I think the stock is going through a correction right now from 1800 levels. I think, if I'm not wrong, from September highs to 1580, where the stock is trading right now. If you're looking at a price, I would suggest a retest of the previous lows of 1500, 1520 mark. That could be a better zone to buy the stock, and hopefully at those levels, the indicator may become a lot more oversold than what it is right now.
Okay, Ashish, the next query is coming from Vikas from Delhi, and he's looking out for some small cap ideas where he can invest around rupees 1 lakh for the next 6 months to 2 years. Any small cap name that's on your radar currently?
So, a few names that we can look at for a couple of years, investment if investors having. So, my first pick is Jack Corp Limited at 300 rupees. You can buy this stock because there's Mumbai Trans Harbour, the bridge fund. This is link which is going to open, will be a game changer for Jack Corp, because they are having almost 50,000 acre land in that particular area. The stock has seen good run up, but I think still it's a good buy. Another stock which I like is Westcon Engineers. This is again at 80 rupees a stock, and the kind of uh, traction is there in their order inflows. This year is going to be their record performance year, so Westcon can be my pick number two. And third pick, you can look at Senco Jewelers recent listing, and this company is also having very good future prospects, and the entire sector is into demand also, and Senco is having potential to be a 4-digit stock in next couple of years.
The next one is coming in from Sandeep Kumar, and he wants a view on Tamil Nadu Mercantile Bank for a period of about 2 to 3 years. Fundamentally, do you think it's a wise idea to look to enter this particular counter at current price, Ashish?
The PMB is again there's a pedigree of small cap banks or the smaller banks from southern part of India and fundamentally doing very well. His stock has given very good returns also already. So my suggestion will be, though banks are fundamentals are robust and everything is right, but we have seen a good run up in this particular bank. So wait for 550 kind of levels to enter into bank. But you can surely keep it on radar for a longer term horizon.
Okay, moving on, and Kunal, the next query is coming from Kamath from Bangalore, and he says he's 81 years old now, has been investing in share market for the past 50 years, and he wants your advice on one of the names in his portfolio, that is Gujarat Fluorochem. He's holding 50 shares from a price of 750 rupees, but he's concerned that in the past 2 to 3 months, the stock has been falling off the 3,000 mark. So what should he do? Is this a good time to book out profits, or should he continue to hold on?
See, I think it's an exceptional, chart from more from a long-term play. I think the stock has done brilliantly well. I think if I'm not wrong, there was a point when the stock was some 7x or 8x in a short span of time. What the stock is actually going through is a corrective phase after that steep rally from, I think if I'm not wrong, again from 500 to maybe 4,000-ish odd levels for Gujarat Fluoro. Again, the stock has corrected almost 20-25% so far. Maybe there could be another 10% odd correction in the offing for the stock price. But I believe that it's a quality stock, has done exceptionally well historically, and I think if you can hold on for it another couple of years, I believe that the stock can make a very strong comeback. So hold is what I would recommend.
All right, with that, let's kickstart with the rapid fire. The first one coming your way, Kunal, and this one has come from Dr. Subaya from Tamil Nadu. He has 3 stocks, all of them are making losses: Lux Industries, Root Mobile, as well as Navin Fluorine. Now he wants to know, should he stay put with them or exit and instead put the money in L&T Tech and other stocks?
Root Mobile could be something which you can hold on. Out of the 3 names that you mentioned, L&T Finance and Deepak Fertilizer are 2 names which I would recommend separately.
Okay, Ashish, what's your take on Jio Financials? Is this the right time to enter Jio Financials for a long term? This question is from Jaya Devapa from Bangalore.
No, I'm not a great fan of Geo Financial. So my suggestion will be not to buy at this price.
All right, what's your take coming in on Phenolix Pipes as well as Siemens? One of our viewers is holding Siemens at levels of 3,600, Phenolix Pipes at 245 rupees per share. Ashish, what's your take? Do you think it makes sense to hold both of these counters for the longer term?
Yes, so both companies are doing good, so remain invested in.
Okay, Kunal, what's your advice on CESE? Parvinder Singh is holding 100 shares from a price of 91 rupees. Can hold for the next 3 to 4 months.
Extremely strong view on the stock, and would recommend to hold on for a target of at least 100 plus.
All right, this one has come from Chelo Durai from Vellore, and he wants to know about Godrej Consumers, 100 shares at a price of 801, holding since March 2022. Wants to know whether he should continue to hold, accumulate or sell. What's your take, Kunal?
Hold, and if possible, look to accumulate at current levels itself.
Ashish, Basabda Sarkar is holding 1,500 shares of Welspun India from a price of 122 rupees. What's the outlook on this one? He's a long-term investor.
No, Welspun India is concerned, as far as Welspun India is concerned, because the way exports are picking up, this company will do well. So hold till 150 rupees at least.
Dheeraj from Ooty wants to know about Wipro. Makes sense to buy at current market price?
Well, not at current market price, but hopefully post results, if the stock corrects sub the 200-day moving average, that could be a very good zone to buy.
Okay, but with this, viewers, we are completely out of time in the rapid fire session as well as in the Buy Now, Sell Now show. Thank you so much, Kunal, as well as Ashish, for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's time to wrap this edition, and it's a goodbye from me and Cheryl and the entire team who put this show together. Thank you so much for watching.